Welcome to the Tow Club Industry Podcast. Very excited today. I have Jeff Bodvake from Specialty Vehicle Funding Group with us to talk about the various types of financing that he offers to those fortunate enough in our industry to need equipment and purchase equipment. Jeff, thank you for joining us.
My pleasure. Thank you for having me.
I really
Thank you.
appreciate it. I know that time is scarce, and having you here talk about what you do is very welcomed. And I think the audience can gain some knowledge, if nothing else, gain some knowledge about particularly the changes in recent times as it results to financing. But kind of before we get started, I would like to know, as a tower myself,
Mhm.
I've seen your name in various towing publications. I've seen you at the towing shows. I associate your name with getting financing on equipment. And I've actually, as I mentioned to you earlier, have done business with you before, and it was a pleasurable experience. But I think the people watching and listening, I think we would like to know kind of like, how did you get started? In other words, how did you get to where you're at now? Give us a little bit of background on
Mhm.
yourself and kind of how you got to this point.
Sure, my pleasure. Well, actually, I started out in the restaurant industry. I owned two pizzerias,
Mm.
for about 12, 13 years. I was in the process of selling both of them, and I was in between businesses. And there was a gentleman that was working at Network Capital back in 1999. He was working in sales there, and he was splitting his time up between Arizona and New York, and he needed like a point person in the office. Back then, it was just primarily fax machines, not much, email, and he needed a point person. So I took on the opportunity of working, with him, for him, not so much for the leasing company. And one thing led to another. This was back in '99, and I ended up working there full time. They ended up hiring me full time back in the summer of '99 to manage their repossessed collateral and their portfolio. So that's primarily where I really got my feet wet in the industry. You know, from there, I ended up taking on responsibility of a few different states and managing the portfolios for Illinois area, Arizona, parts of upstate New York, and I just kind of grew from there. Like I said, I started out just managing the repossessed units, and I was doing a good job with that. And one person ended up leaving Network Capital, and gave me an opportunity to grow my business from there.
And how long have you, would you say, been in the truck finance space?
Uh,
About, is it a couple
I started
decades?
back in '99, so it's probably going on about 20,
Okay.
almost 24 years now.
Yeah. Well, that's
Hmm.
that's a lot of time, and I gotta wonder. I'm sure you've seen our industry change during that time period. So rates,
Mhm.
types of vehicles. I mean, yeah, I'm sure you've seen quite the change.
Yeah, yeah, there's been a drastic change.
Right.
Actually, when I started doing this, your standard 1999 International flatbed DT 4044E was $40,000, and that same truck now is almost $160,000. So
Yeah. No, I've
that,
I've
that
I've come to learn that the hard way.
yes, yes, yes. It's
Yeah.
painful for many, I'm sure. You know.
Absolutely. Absolutely. The other thing that I wanted to get to, I mean, first of all, I'm super excited to be able to talk to you because generally
Mm,
speaking, towers only reach out to people like you when they need something, as
right.
opposed to having a casual conversation about where we might be, what happened 5 years ago, what's going to happen in 5 years. So this is obviously exciting. I did want to ask, just in a broad sense, and given your expertise in the towing industry and watching all of this unfold, um, what other commercial equipment do you finance? Obviously, other types of trucks, I learned from
Mhm.
the website, but like,
Right.
what about, for example, parking lifts or forklifts, ancillary equipment to our industry, for example? I was just curious about things like that.
Right, right. I mean, we will finance various different types of equipment for the towing industry, such as like skid steers, you know, Zach lifts, you know, equipment. If you have a repair facility, we'll finance various welding equipment and you know different you know lifts, maybe where there be mobile lifts where they can you know work outside. You know, so we do have different types of equipment that we do finance for the towing industry as well. Um, as well as towing, we do finance also school buses, FedEx trucks, dump trucks, paving. We just started getting into the paving industry as well right now.
Wow.
You know, car haulers, the 10 car haulers we will finance.
For those
And
people
also,
who do vehicle transport and stuff like
right,
that.
for long distance hauling, you know, as far as that's concerned.
Okay.
You know, freight, we started financing that, but we started seeing a little bit of a delinquency in the industry with the freight. So we've kind of stepped back from financing, you know, long haul, you know, dry goods type of
Right.
industry right now. Right now, it's just really not the right time right now for that. I think what happened was a lot back in the COVID is a lot of people got involved with buying trucks because back then nobody was going to stores, so everything was done online. So the trucking industry, everybody really jumped on board a couple of years ago, and now I think now just the gates are just flooded right now with that market right now. So
Got it. So, just roughly speaking, I mean, I know you probably don't have the exact number, but does towing, what percentage of your deals or funding, I should say, is towing the primary industry still for you?
primarily, that's our biggest industry. I would say it's probably a good 65 to 70% of
Okay,
our industry.
that's quite a bit.
Hmm.
Okay.
Yeah.
Yeah,
Yes.
that's really interesting. So, I gotta ask, you probably know, if not 1,000 towers, maybe a few thousand. Am I right? I mean, like,
Hmm.
I gotta think that you've done business with a lot of guys out there, given your experience.
Yeah. Funny you use that number, 1,000. We reached we booked over 1,000 deals for 2024 this year. So we had that was our a mile
That's impressive.
marker for
Yeah,
us.
that's impressive. Okay.
Yeah, it is. But yeah, I deal with you know so many people nationwide only because I also go to the majority of the shows nationwide as well. You know,
Okay.
our first one coming up now is in April, and
Okay.
that'll be down in Orlando.
Okay. So
And
you'll
then
be at the Orlando show in April. Okay. For those
yeah,
of you listening, look for Jeff
mhm,
at the Orlando show.
yeah,
Um,
and then May, I don't have the exact date. I think it's the second week of May. We'll be attending the Las Vegas tow show as well. So
I'll be
those will
there
be
to
our
shake,
first
I'll
two
be there to
shows.
shake your hand for that. Yeah.
There
So
you go.
for all the listeners out there, Las Vegas in May, Orlando
Mhm.
in April, you need truck
Yeah,
financing, you come talk to Jeff, and you tell him that I sent you, of course.
there you
Uh,
go.
uh, so that leads me to the next thing that I wanted to discuss with you, Jeff, and that's, you know, I don't think anyone listening is going to be surprised to hear that we have, you know, higher interest rates, we have inflationary pressures, and just as, if not more importantly, we have a pretty significant price increase on new tow trucks. I would say in the last, what, 3 to 4 years, there's been some pretty significant increases, right? So,
Yes, you know, correct.
so like, when towers are looking to finance new used equipment, explain to me kind of how that looks now compared to the way it used to look in terms of rates and whatnot. And are towers looking at deals now and saying, I really want like a 8-year term on that. I don't want to, everybody's used to a 5 to 7 year term. But like, what is happening now as a result of the negative stuff we just discussed, that is helping you provide a tool for towers to kind of mitigate those increases? What are you
Mhm.
doing something more creative than most, or could you talk about that a little bit?
Sure, sure. Well, I mean, as starting out, the truck started out between 40 and $50,000 for your standard flatbed and light duty wrecker. That's really increased substantially, to probably 150, 160,000 now. So we started with 60-month terms on those, and we've now increased to 72 months.
Okay.
On your medium duty trucks, we will now, back then it was 150 to $180,000 for your standard 16-ton unit, which is now well over $200,000. So now we've increased the term to go 84 months on those.
Okay.
On your heavy duty wreckers, on your 25 tons, 50 tons, we can now go 96 months on a unit, and also put a $30,000 residual on the end, to make the payment more comfortable.
So
So
like
that
kind of
right,
thing.
right. So at the end of the term, you have a 30% residual, $100,000. You can refinance that for another 5 years.
Pretty
So
easily
that
at that point, right? You've got the equity in the unit.
you have the equity, the customer, and primarily, this, for the most part, rarely do we ever really see any heavy duty units come back as repossessed. Anybody that's buying a heavy duty unit really is knowledgeable in the industry, and they know exactly, what they're doing, and they manage their money accordingly.
Right.
Just also too, as you know, like these rotators now are well over $1 million
I've
at this
seen
point.
that. Yeah, I've
Yeah.
seen that. It's shocking. I mean,
It is. And we were also going 96 months with a 30%, balloon on that. We have now gone to 12 years, only because of the fact it's just been so expensive. The affordability of the payment is just overwhelming right now. And you have to take consideration, that's before you even, add insurance, and you start putting a driver in there, fuel expenses, it gets costly. So we feel comfortable going 12 years right now, and that's also without a balloon. That's without a
got it.
residual. So
Got it. And judging by how long I've seen your name in the industry, the other thing I wanted to ask is, kind of what, if you could give us an idea as to what percentage of your deals are repeat deals? Like, are a lot of your deals like, hey, I've dealt with this gentleman before or this person before, and they're coming back to me? Is that a big part of what you do?
it is. It is probably a good 55 to 60% of my business is the repeat business, if not
That's
more.
impressive, Jeff. That's
Yeah, because
impressive.
of that. And don't forget, I mean, I've been in the industry for almost 24 years now, so I've built up a large portfolio where I'm constantly getting phone calls of repeat business,
Got it.
from my existing customers. And also I'm getting a lot of referral business also as well from those customers,
Okay.
because you provide a good service, and you know and they come back, so, and this a good word, goes a long way. you know
Right.
you do the right thing for customers, and and it comes back to you tenfold.
Got it. Yeah, I mean that obviously makes a lot of sense, and I think that's kind of like the rules for any kind of business or any type of commerce is like, if you do a good job for the people that you're doing business with, they're gonna come back and take another drink of water, right? Like
Right.
they're gonna come back to you. Um, kind of leads
Absolutely.
me, kind of leads me to talk. I wanted to follow up just a little bit with this next question. I know you touched on this a little bit earlier, but for those towers that are listening, um, and you know this better than anyone, there's towers, for example, my towing business, I'm only light duty, I'm only private property impound. I use a very specific type of equipment. Um, but other towers have different types of equipment.
Hmm.
The towers need to consider when, they're looking for financing. Should they be looking at different types of financing for different types of equipment? You talked a little bit about, hey, the terms, the more expensive the equipment, the terms they can stretch out a little longer. But, like you mentioned, when you have trucks exceeding, like you mentioned, rotators, I've seen them 800,000, 900,000. I've seen them over 1 million.
Right.
Can you talk a little bit about the thresholds? Are the thresholds cost? Are they based on like vehicle equipment type? In other words, does the bank, in this case, I'm referring to your organization, but
Hmm.
do they look at, let's say, a heavy duty record differently apart from the cost, than a light duty wrecker or a light duty carrier. Can you talk a little bit about what towers need to be looking for when they're kind of like considering financing for different
Mhm.
equipment?
Right. Well, I think it's important too, to have your finances in order too when you're starting to look for a heavy duty unit. You really want to have a good business plan as far as, if you're really starting out with your first heavy duty unit, because that can be costly, down the road. And also whenever they're looking to finance something like that, they really need to, make sure that they understand the industry. And as far as also billing, when it comes to billing, with the heavy duty units, I'm hearing a lot of people getting hurt, with a lot of these, they go out to collections and try and collect, a lot of these people that they're towing for may not even be insured. So then who do you go after them as far as even, collecting after that? I mean, I've heard of people going out there and doing a recovery for 2 3 hours, and then they submitting claims, and they're not getting paid. So it's really important to make sure that that before you go out on those jobs, really to make sure that that there is proper coverage, and that that you will be paid at the end of the job.
Yeah, I've been also reading and hearing from towers. I talk to towers a lot, pretty regularly. I got burned on this 70 or 80,000. People have to realize, right, when you're operating a truck that's $1 million and you're sending it out to recover a tractor trailer or something, the risk
Hmm.
is big, the cost is big, the expense to
Right.
run the job is big. And so I've also read, to touch on your point a little bit, a lot of towers kind of getting burned, trying to collect on these big jobs. And thankfully there is some towers out there that are sharing information about their collection efforts with the industry. I think one
Hmm.
started a class about a decade and a half ago or a decade ago, kind of teaching towers like, hey, like if you go out and you do this complicated recovery, it's very expensive, make sure you get this information and make sure you do
Right.
X, Y, and Z and cross your T's, dot your I's, etc. So
Hmm.
I'm grateful to the people in the industry who are sharing that type of information to help the industry. Can you to follow up a little bit about preparing towers when they're looking for financing? I wanted to ask, do many towers? I imagine this would probably be the new towers, but are they sort of saying, "Hey Jeff, can you recommend an insurance company?" Because that's like the thing that we had Chip from ATIG, who's a big insurer for the towing industry. We had him on a few episodes back, and we were kind
Hmm.
of talking to him about like the challenges. But I wanted to ask, I mean, I imagine by the time they talk to you, has that been sorted out for them, or do some of them, perhaps the newer guys, still say, "Hey man, like, how do I find insurance?" Or is that a thing for you?
It is. I do usually give, a couple of different references, not just one, 2 or 3 referrals to get out there. It's been more of a challenge lately finding people that do insure. I know a lot of, especially with the storms that's been going on down in Florida and such, a lot of insurance companies, such as like Progressive, or be pulling out of an area. So it really gets challenging even trying to find somebody that will insure you. And you see it all over the posts on Facebook all the time too. People frustrated, and
Yeah.
they're just flabbergasted at how much their premiums are every month. Just with 1 or 2 trucks. It
Yeah.
gets overwhelming. So you try to give them a couple of different options. By the time they come to me, for the most part, they do have all that figured out. But there are times where I could say, hey, maybe I could save you a few bucks. Why don't you give this
Sure.
this broker, this insurance company a call?
Sure.
So that really has been a challenge, because there's less insurance companies right now insuring towers or car transporters, or tractor trailers, what have you. Anything that's rolling lately, it's been a
Yeah.
challenge.
Well, I can only speak for California, but just my personal anecdote in my towing company, our premium has tripled within 5 years.
Mhm.
And with no sort of external reasons, so it's not like loss related or anything. The premiums have just tripled
Right.
since 6 years, 2018 or so. But
Hmm.
yeah, the pressure is definitely there. I I did also want to ask, it kind of brings me to my next kind of point of discussion is, you know, at what stage do most towers reach out to you? And I ask this because I remember the days when I was new in the industry and I was trying to buy equipment, you know,
Hmm.
and you see a piece of equipment, you're like, I need that. It's got whatever, the bed that I need, it's got the chassis I want, et cetera, et cetera. And, you know, in those days, before I sort of knew what to do, I would, you know, call the guy that's got the truck for, you know, hey, I'm interested in that truck, not really understanding the benefit of, hey, I need to talk to somebody like Jeff first.
Hmm.
Jeff is going to
Right.
tell me what the deal is going to be on this piece of equipment.
Hmm.
So are they sort of coming to you before they've gone too far with the equipment purchase? Or are they coming to you, or is the dealer calling you? Hey, Jeff, you know, I'm trying to help this guy get financing. Is it like a mix of both? Or I'd like to kind of
Yeah.
hear how you handle those scenarios.
Well, first of all, if you're talking about used equipment, couple of years ago, back when COVID started, I mean, there was they just kind of just stopped production of new tow trucks, new vehicles, in all industries, for the most
Remember
part.
that.
So so the used trucks really took off as far as the pricing really exceeded the amount of the value. I mean, there were people financing, trying to sell, trucks that they're trying to get more from what they paid 10 years ago. Yeah. So it was a challenge to really try to price the market and say, hey, what is the truck really valued at that time? Because it was just all the pricing for the most part, it was overinflated only
Right.
because there was no new trucks at that time. So things have kind of gone back to normal now. So whenever I get a phone call, and say, hey, listen, we may have stretched a little bit more a couple of years ago on this used one, but we're gonna have to go shorter term on this, because what happens is you go longer term on these used trucks, they're still making, payments on a truck that had 350,000 miles, and then a year, 2 years down the road, they're calling me looking to refinance a motor because the motor blew. So, I try to educate people, say, hey, listen, go shorter term on some of these, on this older collateral, because down the road, at least you'll have the truck paid off. God forbid you have repairs or anything down the road, which they usually do anyway, even though you're making a payment. But just try to be a little proactive and say, hey, go a little shorter term on this truck, because prepare yourself for future repairs.
I see.
So.
Yeah, that certainly makes a lot of sense, particularly from the perspective of, you know, the lender who's saying like, hey, you know, you're trying to buy a 2020 model truck. It's got 300,000 miles on it. And, you know, I don't want to finance it for 7 years or, you know,
Hmm.
whatever the case may be. Um,
It'd be
I
easier, and I again, I try to educate people even on news trucks now. See if you at least put the sales tax down. Maybe go shorter term, bite the bullet a little bit. Save a few dollars more. At least maybe go 48 or 60 months versus 72. At least you're in an equitable position when you go to trade it in. So what's
right,
happening now too is, like, you're paying a lot more money for these trucks, and people are, putting a lot of miles on. If you're doing motor club work or what have you, be more apt to trade it in earlier than later. So
right,
then you don't want to be upside down on that truck, come 2-3 years down the road.
right.
You're
Because they
doing
wear them
yourself a
out, right?
disservice. Yeah, you do. I mean, you're doing yourself a disservice because you want to get out of this thing. You want to get into a new truck. Maybe,
Right,
maybe you don't want to do the repairs. Maybe, you'd rather just buy a new truck. At least you still have warranty,
right.
and then at least you have the warranty, that's paid for, and you're not paying all the expenses, in repairs. So.
Right. Jeff, one of the things that gets discussed a lot, I mean, as you might imagine, given, you know, me and kind of like my interest in the industry and whatnot, and my time in the industry, but one of the things that's argued about a lot, like online, is like, oh, it's better to buy a used truck. It's better to buy a new truck. And it kind of leads me to want to ask you, and this is an assumption, is it
Mhm.
generally newer operators that are buying used equipment, or is that a mix of experienced operators and newer operators? Or are experienced operators primarily saying, you know what, I've done the used thing, I want to buy new from here on out? What is your seat of the pants kind of like assessment on that?
I think for most for people that are really starting out, they're just getting their feet wet. Right now, it's just become so expensive for them to really get into a new truck. If you're just starting out with the expensive insurance, premiums and such. So I'm seeing them, try and go, with a used truck. But then the problem is, you go with a shorter term. On a used truck, the payment's a lot more. And then you're in the same boat where you might as well just go with a new truck and go 72 months, and then you have a more comfortable payment. But then, if you're looking to do a start, if you're a startup business right now, primarily you're looking at 20-30% down, for a startup company. So you have the expense of the startup, and then you have your operational costs, and you need your backup money for anything, goes wrong. So it's kind of a catch-22. It's tough. Either you're going to bite the bullet with a more expensive payment, and then run the risk of having to do more repairs, or do you go longer term, and you have a new truck, and it's all, everybody's comfort level is different. So
Sure.
it all depends on in what kind of business that you're in too. So I mean,
Right.
it just, you want to go with heavy duty, you want to go with light duty, then you're going with if you want to go for a used truck, a lot of times you can get a very good deal on a used heavy, for example, if you want to go with that route. Couple of years old, you're not paying the FET, somebody else already paid that.
Right.
So, there's deals out there. You just have to go out there and look, and you kind of find it, and really have to educate yourself as far as, what you're looking at, just buyer beware, when you're looking at used stuff. But for the most part, if you have people that are selling, like a used heavy, for the most part, those trucks are pretty much being maintained, though they're out there. The mileage for the most part is not as much as versus a light duty truck, because they're really
Yeah.
not really going long distance per se. As they have a certain
Yeah.
territory on the interstate that they're running, and they're just going back and forth to do a recovery. They come back. They're not primarily, so much towing per se with that,
Right.
versus
Right.
recovery. So,
Got it. So
and that's where the 16 tons come in really handy too, by the way.
the
I
medium
talked
duty.
to
Yeah.
the medium duty. I talk to people all day long. They go to sell that medium duty. I'm like, are you sure you want to do that? Because like,
Right.
those things are like gold.
Yeah.
You could transport your standard, box truck, or
Yeah.
your 33 GVW, truck, and
Yeah.
those primarily are money makers. And anytime anybody usually sells one, they kick themselves. Like, I should have kept that medium duty.
Right.
It would have came in handy versus, using their 25-ton now, where a 16-ton could have done the same thing.
Do the job.
So
Yeah. So it is
it's an
kind of,
extrovert. It's just,
yeah. And is it safe to say that for light duty used trucks, primarily that market is for the newer operators? Is that,
mhm.
or the smaller operators, let's say, and then the established operators are generally looking at new equipment?
Yeah.
Is
Well, the
that safe
light
to
duty
say?
too, though. I mean, keep in mind. I mean, even if you're a big operator, like, as a light duty truck, you need those smaller units, like, especially if you're doing, work in garages.
Yeah.
You need to get into those smaller areas. So there's a niche for those, even for those big operators, where you can't get a larger truck in a lot of those garages.
Right. Right.
Get in and out. So,
Yeah.
and like, like the light duty service trucks, I mean, those are pretty much, used for for the motor club work,
Right.
so.
Okay. Jeff, kind of like one of the topics that I think, and I waited till the end to kind of ask you this, but what I'm about to ask you generates a lot of conversation online. Um,
Mhm.
and only because, like if, I participate in a lot of the towing conversations online on social media and whatnot. And one thing that happens when you do that is you kind of learn about what the pain points in the industry are, because you see 20 different guys sort of gripe about the same thing, right? So,
Right.
but like I think most business owners, or in our case, towing operators, like they know the importance of credit,
Hmm.
paying your bills on time, establishing good credit, and how that relates to getting financing. But everybody, and I'm sure you've heard this obviously more than I have, but I'm sure
Hmm.
you've heard everybody's story as to why their credit is not good and what have you. But
Right.
I did want to ask, there are towers out there. Some of them are startups and some of them are established, and they always say, I took a hit on my credit or whatever. And what is there anything that you do in particular that can help towers who maybe have faced challenges in getting financing for equipment? Do you have a special program? In my experience, I've went through that process over 20 years ago,
Okay.
and I had to pay the piper to get financing, right? I mean, the cost of the money was very expensive at that time. Uh,
Hmm.
Thankfully, for my own purposes, that has changed now, and I'm able to get traditional, let's call it traditional terms. But is there anything you do that can help those types of towers? Is there
Hmm.
any programs that you offer? Is there, obviously the cost would be higher, I imagine, but could you tell
Right.
us a little bit about that?
Well, when it comes to programs, for the most part, it's really credit based as far as how your credit is. And what I always tell people is it depends on if you're starting out or not, or even if you've been in business for quite a few years. It's really important, especially when you start borrowing anything more than $500,000 or more, is really that you really want to show a profit on your tax returns. That really is important. I mean, either you're gonna pay, this the old saying, you pay me now or pay me later. But you got to pay taxes. You have to show you have to show a decent amount of revenue on your tax returns,
Right.
and have that bottom line look good. Because the end of the day, it's going to really reflect, how much we're going to lend and what the lending capability is. You want the net income to look strong. You want your business checking account. You want to show a decent average balance in your business checking account, because whenever we're looking to borrow, it's not like you're going into a dealership and you're buying a vehicle. You're approved in 5 minutes. Car is not income producing. This is income producing. So you want to show on your bank statements and on your tax returns that you're showing a profit at the end of the day, and that you can afford to make that payment. You got a $2,500 a month payment or a $3,000 a month payment. You want to show it at the end of the month. You got a decent average balance at the end of the month, showing that you can afford to make that payment. So we always tell people, you know what, don't give me, bank statements. You have an ending $100 ending balance. That, I mean, that's just not going to work. So I try to educate people. Keep a decent amount of money in there. I understand cash is king. People want to sock away the cash, but you really want to show that you can be able to afford to make that payment at the end of the day. So that,
Right.
that is important. You want to make sure you have no, but clean up any small judgments or any small, medical issues you may have on your bureau. All that brings down your credit score. You believe it or not, you got a $20 a medical amount. You get say, hey, I'm not going to pay that, that balance. Pay it off. That's going to boost up your credit score. You
Right.
know, 30, 40, 50 points, so that really makes a difference. At the end of the day, you're paying that in interest. So
Right.
get
Right.
rid of that $20.
Yeah.
At the end of the day, at the end of the 5 years, you're going to be saving yourself a substantial amount of money, where you have a credit score of 620 versus, 700.
Right. And a follow-up to that, um, again, this is something that's talked about quite a bit in this space, which is, you mentioned business finances and hey, make sure your books are clean. And but
Hmm.
I think one thing that people often argue about, particularly online, for what people love to argue online, as you might imagine.
Right, right.
Uh, they're definitely, there's less apprehension about offending somebody when you're typing on a keyboard, right? Uh,
Right, right.
but one of the things that's talked about a lot is, my personal credit is good. I applied
Hmm.
for financing and they rejected me because I don't. So, you mentioned the importance of preserving credit, et cetera, et cetera. But when you guys go to look at a deal, how much of the deal is hinged on how their personal credit is and or how their like tax returns and business financials look? That's
Mhm.
what I think a lot of people get confused about. Is it both? Is it one or the other? Could you kind of explain that?
Well, sure. I mean, just when it comes to tax returns and you know, if you're looking to borrow, like for example, we have a program where, app and bank statements up to $500,000. So I can pre-approve you without looking at any financials up to $500,000 with 3 months bank statements and a credit application. So you want those bank statements to look strong. You want to look at your business credit too. So for example, we don't report to your personal credit, but there's PayNet report we report to. So you want to make sure that you're making your business monthly payments on time if you have other vehicles or if you're just starting out. It's important, that you're making your truck payments on time. So it won't reflect on your personal credit, yet it will on your business.
Got it.
Uh, so you want to look for comparable borrowing too. If you're just starting out, obviously you're not going to have much comparable borrowing. So, we would require maybe a little more of a down payment,
Got it.
depending on how much you're looking to borrow.
Yeah.
But it is primarily focused on your personal credits. You want to keep that credit score up and you know as much as possible. I know times are challenged and people have credit cards, and a lot of times people are even using their fuel cards or credit cards as fuel for points. I always tell everybody, pay that off at the end of the month. Start
Sure.
fresh.
Yeah.
Because that makes a big difference on your credit score when you're leveraged. As far as your credit,
Yeah.
that brings down the credit score as well. So it's good to use the credit cards for various reasons. You want to kind of keep those balances fairly low and keep
Yeah.
that credit line open.
Yeah, keep it in. Yeah, keep some room in there so if you have a
Right,
rainy day. I
right.
Jeff, I wanted to talk to you a little bit because I know that you have a website, and for those of you that are listening, Jeff's contact information in addition to the website will be in
Mhm.
the video and episode description here. But can towers go onto your website and fill out an application for credit, for example?
Yes, they can. They can go on and fill out an online application, send it to me directly. They can even email me directly, and I can send them an application as well.
And what
And
kind of response time could they expect, let's say?
well, it'd be within 24-hour turnaround.
Nice.
A lot of times it's if I get the application in early in the morning, I have a credit decision by the end of the day, or I'm
Okay.
at least I'm reaching out to you and I'm giving you an idea how the deal looks.
Okay.
It also depends on the size of the exposure, how much you're looking to borrow, over
Right.
500 or up to or even $1 million. It has to go to a credit committee, so that may take an additional day or so. It
Got
all
it.
depends on on the
Okay.
finance amount. But for
Okay.
the most part, 24 hours, I have an answer for you. I'm
Okay.
reaching out to you the minute I get the application. Within an hour, interview you, put the deal in credit, and I should have an answer by the end of the day.
Okay. Well, Jeff, I've taken up a lot of your time. I really wanted to thank you for joining me in on this. And I hope the audience that is going to be, consuming this information, I hope that they think long and hard about, number one, contacting an expert like you,
Hmm.
instead of going to, one of these people that may or may not be prepared or doesn't understand the equipment in our industry, which I know you touched on this a little bit, but like I think that's important. And I think if people in our industry are going to be wanting or needing financing, they need to be not necessarily, I don't want to disparage banks, but they don't need to be walking into somebody who doesn't know our equipment. I think they should
Hmm.
be reaching out to somebody like you who understands the equipment in our industry. Just based on our conversation here, I can tell that your knowledge of the different classes of tow trucks is very good. Uh,
Hmm.
and so I hope that, the people that are listening and watching gain some valuable knowledge from hearing you break down what you do, what their options are. It's been very helpful and I appreciate it, Jeff.
I
Um,
appreciate it. And not only do we know the equipment, we know the industry as well. you
Right.
know, all the individual industries.
Right.
So we can educate them on different things in the industry, and what's going on out there. And you know, so you try to give them as much information as possible, and then they go out and they make a you know, a decision moving forward after that.
Okay. Well, hey, thanks again, Jeff. And I wanted to leave my audience with this, which is, you know, if you don't care to know, don't tow.
Mhm.
Thank you all for, you know, listening in. Thanks again to Jeff. And Jeff, we'll be in touch. I actually have a deal coming up, so
All right.
I'm gonna send you some information via email tomorrow. I'll be sending you an invoice. I have a deal coming up. I really enjoyed this. And
Thank you for having me. My pleasure.
yeah, no problem, man. Thanks again. And I will be in touch.
Will do. Thank
Thanks,
you.
Jeff. All right.
Take
You
care,
take care,
everyone.
man.
Thank you.
Bye-bye.
Bye-bye.